41.4 million birds culled, egg prices up 312%, and the outbreak is still spreading. This isn't just a health crisis, it's reshaping markets worldwide. This is DIY Wall Street, and today we are talking about the bird flu. The current bird flu crisis began in September 2024, when a new variant called D1.1 emerged and rapidly spread across North America's migratory flyways. By December, commercial farms were reporting infections at unprecedented rates. The impact on consumers was immediate and severe. In January 2023, we saw record egg prices reaching $4.25 per dozen. Fast forward to January 2025, and prices soaring past $5 nationwide, with Hawaii consumers paying as much as $9 per dozen, according to Agriculture Secretary Brooke Rollins. What we're facing is a panzootic, the animal equivalent of a pandemic, with this highly pathogenic H5N1 avian influenza spreading worldwide. But what makes this outbreak especially concerning is how it's jumping species barriers. Initially confined to wild birds and poultry, this virus has been detected in cows, sea lions, and minks, showing unprecedented ability to adapt to new hosts. Even more concerning, human cases have been reported, though they remain relatively rare. CNN report highlighted another alarming factor, research suggesting wind may play a significant role in spreading the virus between farms, challenging conventional biosecurity measures. The response to infected flocks raises both ethical and economic questions. When a flock is infected, farmers must eliminate all birds to prevent further spread. Current methods include CO2, asphyxiation for mass culling, followed by composting, incineration, or rendering. The term burning chickens is industry shorthand for thermal disposal, though many are actually processed through rendering facilities to recover usable materials. Critics question whether culling practices are humane, and if alternative approaches like vaccination might be more effective long term. The controversy has implications for consumer perception and regulatory oversight of the industry. One of the market's most puzzling aspects is the divergence between egg and chicken meat prices. While egg prices have skyrocketed, chicken meat prices have remained surprisingly stable, even declining in some regions. This seeming contradiction stems from different production cycles and supply chains. When broiler chickens, raised for meat, are culled, the market can rebound relatively quickly with new flocks. However, replacing egg-laying hens requires more time, creating a longer supply disruption. Cal-Maine Foods, America's largest egg producer, has experienced a remarkable run during this crisis, posting record quarterly sales despite the outbreak. What sets Cal-Maine apart is their vertically integrated business model. They control the entire production chain from feed production to distribution, giving them significant advantages during supply disruptions. Their extensive distribution network allows them to efficiently move product nationwide, capitalizing on regional price differences caused by localized outbreaks. Perhaps most importantly, Cal-Maine has demonstrated remarkable adaptability by sourcing eggs from unaffected regions. Even as their own production faced challenges, they've maintained volume by purchasing and redistributing eggs from other suppliers. This strategic flexibility has allowed them to benefit from the price increases, effectively doubling their margins, while minimizing the production disruptions that have crippled smaller competitors. The market has rewarded this resilience, with Cal-Maine stock outperforming not just the broader market, but also the actual increase in egg prices themselves, suggesting investors see long-term structural advantages emerging from this crisis. For investors looking at this specific market disruption, five primary opportunities stand out. First, egg producers like Cal-Maine, which has demonstrated the ability to maintain sales even with production challenges. Their vertical integration and distribution capabilities provide competitive advantages that smaller producers lack. Second, biosecurity technology providers like Neogen Corporation have seen increasing demand as farms scramble to protect their flocks. Their pathogen detection systems and sanitization technologies represent critical infrastructure in this new reality. Third, vaccine manufacturers are gaining attention. Beyond Moderna's $112 million government contract, companies like Zoetis that specialize in animal health have seen increasing investor interest as vaccination strategies gain favor. Fourth, alternative protein producers benefit from both immediate substitution effects and long term awareness of animal product vulnerabilities. Beyond Meat have reported retail sales increases of 22% since December. Fifth, companies with diverse protein portfolios like Tyson Foods provide a hedge against single species disruptions. As chicken availability decreases, their beef and pork segments have helped offset losses. As this outbreak continues evolving, several key indicators need a closer look. New species transmission, vaccine development progress, and regulatory responses will all shape market outcomes. Companies investing in biosecurity, alternative proteins, and resilient supply chains will likely emerge stronger when markets eventually stabilize. From DIY Wall Street, remember, in disrupted markets, information becomes your greatest asset. Want updates on how the bird flu will impact the stock market? Subscribe so you don't miss out.